Stocks on the less. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down.
It's supposed to be crushing! Inflation! War! They're fighting!
Hi, I'm Josh Answers. And if you were thinking any of those things today, I have very bad news for you because today's headline is going to piss you off. Okay? But, ladies and gentlemen, I hope you're ready. I have to see you again here. The market was crazy. I got the watch list. I got the plays for you. We got 3 that I'm going to go over. PPC, that was a play we made today. We're going to talk about that after. The recap today was very simple. The market just went up. People are talking about buying the dip, but this is what we need to talk about. I'm telling you, your mind is going to get blown. Literally, the new narrative right now, if we keep rallying, people are saying today is because inflation is good for stocks. I know. I hate to tell you this, but here, let me show you. Literally, they brought up a lot of things, oil, all that. We haven't had any headlines, but stocks as inflation hedge is the new catch-all narrative. What did they say? One theory gaining traction is that equities are among the best assets to hold when consumer prices are spiraling. Oh my gosh. So, that explains today. Literally, you'll see when we get to this screen, even AMC, GME after hours, they're going crazy. China stocks had a rally because of the BABA buyback news, but a lot of the underperforming growth stocks, they've came back to life today. Again, you saw it with so many different names. That was the real story here. There wasn't any other updates like we said. And now moving forward, this is what I'm going to show you here with the video. Bullish, bearish. Again, I hope you know I'm not making fun of any bulls or bears out there with the opening skip, but we're going to talk about it. We went over it here on stream. There is something very simple going on. There is a divergence between bonds and a divergence between equity. So literally, stocks are going up, bonds are going down. All you need to decide is which one is right. Literally, are the stocks going to be right and this is the bounce, or are the stocks wrong and the bonds are showing the real direction of things? So that's what we're going to go over. I got the plays, all of that. Like the video, and yeah, let's get into it. The main thing here today was all about the bonds and stocks. If you saw the S&P, we literally just went straight up. The oil and commodities, they were up during the futures, but they chilled out. And then even later in the day, they started going up. But it's not as if commodities and energies actually went down. On the stock market, energy names sold off. You saw a little bit of the unwind from the gains of yesterday, but tech and banks especially, now that little theme we were looking for where yields go up and banks benefit off of it. You saw JP Morgan, Wells Fargo, they went really good today, but tech, Tesla, those were leading the way, but literally there was no news. You actually, if anything, had worse news to start with the morning. Again, a lot of it was about what's going to happen here with Ukraine and all of that. Everybody keeps bringing up this narrative, but in the morning, you had James Bullard, you even had, what's his name? John Williams. He brought up cryptocurrency, and then even Fed Dolly. All of them came aggressive, and even James Bullard in the morning, they were talking about a double rate hike. So pretty much everybody on the Fed is sounding more and more hawkish. We got a very hawkish statement. The literal Fed futures, they were all even dropping throughout the day. This keeps going down. Even TLT, the short end of the curve, I believe the 2-year bond has moved the biggest it has moved in 4 decades. Bonds are getting blown out. The yields are going up. Fed futures are going nuts. And now this is the main thing, is that we're getting all this hawkish comments, but it's going to let people say, well, it's priced in, we're not reacting, or the market's going to price in something and then we are ignoring it. So that's what brings us here to the main thing. This is why I'm focusing on it, giving you the quick watch list. I'll get here to the plays, but the very simple analysis right now, we haven't got any updates on escalation. We are still worried about the commodities and where things are at. And realistically, in the next coming weeks here, earnings is definitely going to give us a reality check or a big booster. But right now, in the meantime, leading up to all of it, the real question is, are bonds or the stock market correct? So you've probably seen me bring this up. This is TLT overlaid with the S&P 500, and this is what we're watching. And why it's so important is because traditionally, bonds and stocks move opposite of each other. So traditionally, to watch the bonds go down, stocks go up, That's totally normal. But as of like 2020, since everything went crazy, the correlation has been positive. Stocks go up, bonds go up. That's kind of been the trend here so far. And even more specifically, look at the beginning of the year, the bonds led the way down and then the market caught up. Even early February leading into March there, the stock market bounced, the bond market disagreed, then they all caught up, and then we had that little fiasco. And now lately, you now have the bonds plummeting down, but then you have the SPY going up. So this is bringing up the question, do you think the bonds are right or the stocks are right? Eventually, one of them is going to give in, and this is the main thing we are looking for. We talked about it today. You can go after this play if you would like to. You could wait for confirmation, but now a lot of people today, they're like, wait a minute, what is going on? Why is the market up? Why are the growth stocks again? And now to the narrative, you are going to watch this narrative come back if it does, and that's what we'll find out here in the next coming weeks, especially with earnings. But literally, people are going to start saying that inflation is good for stocks again. So this is what we need to be playing out here. And really in the now short term to midterm, all of the Fed, it's getting more and more bearish or more hawkish, but it hasn't turned into bearishness just yet. So this is the main thing I'm looking at. Today was very easy to digest. The news wasn't crazy. You even had like a NVIDIA thing and the chip makers went off. They had a keynote, but nothing too crazy out of that. And then really you had a lot of stars of the show. It was all of these tech stocks that were beating down, then Tesla back in the 1 trillion club, and then even crypto going crazy. You got a lot of people excited. So that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different stocks that I'm looking at coming into tomorrow, but I'm just going to take you straight to the plays. The first one is going to be PPC. I grabbed 5, I believe, of the May, or no, I think I got 3, only 120. 3 of the May $20 puts. And why I got this one, it's related to food. It's related to food costs. If you guys remember when we had the performance food groups, I was even looking at PPC, but I was like, it already dropped, and then it was doing its thing, and the premiums were crazy. But now today, this one came across the scanner. So what I liked about it, a lot of people have been talking about the scanner. It's literally any other scanner you could find. I am just applying my own analysis of what I define as unusual. And for me, that is when a really dead option or a dead option chain starts to come to life. So if you come to the Pilgrim Pride option chain, you'll see there's nothing on here. Literally, volume is very low, but then randomly, there's these bigger trades. If you go to May, there was only these 2 trades, and then we got into it. Some people were trying to grab in between, but you could see open interest, volume, everything across the board. Nobody's really looking at this play. So when I see a trade worth like $10-20 million come through the wire, I'm like, wait a minute, that seems a little bit weird. But the reason why I'm executing on some of these, they kind of make sense with the overall news story and environment that we're dealing with. So put on Pilgrim's Pride. It's related to food. You're watching the commodities kind of come back this week. I thought this one would be decent, so I grabbed 3 of these plays, spent about $120. Didn't really move much throughout the day, so we will see where these go tomorrow, but I'm definitely going to be watching those. Then the next play, this was another one that came across the scanner. We made this play. It says it came down here at close. I don't know if that was that little like back and forth there, but I'm pretty sure these will be up around 50%. They were up almost 100%, but I grabbed the March 25th weekly Facebook, 237.5 calls. I bought, I think, 3 of them. No, this was the one that I bought 5. I bought 5 of them for $8 at literally 0.08, so I spent $40 total. It was a risky play, but then this one came up, and now why would I go with Facebook? Remember what we've been talking since Friday and even Monday. People are saying this rotation out of value, then going into tech. You've heard this a couple times, and then even after today, that's what you saw. And remember the Amazon play yesterday, we ghetto spreaded that. We'll go over that. That was another one of those. That's why I liked it. Even if I'm getting puts, I'm even grabbing some of these, and then if it's a risky weekly, if it does go crazy, you could actually get a bigger return. So I thought this would be a good one. It showed up on the scanner, not really active, even though it was a weekly chain, and then it was even cheaper than what the other guy paid for it. So you could see here on the Facebook option chain, there's these 2 options with 0 open interest. These were the ones, but in the morning, the big orders that triggered the scanner, they came in at like 10 to 12 cents. Then they shot down, then they went back up, and then middle of the day right here, they were at the lowest point. So I said, all right, let me grab some of these. Grabbed them at 5 cents. You could see they went up, and then I think the activity there at close is what lowered it. But these are pretty much up about like 50 to 60%. So I like them. Going to hold them out. A very small play. If we do get a crazy rally again, so far, last couple days have already been nuts. I think this one will be a good one. So watch out for them. That is the second play. And then finally, I'm going with Airbnb. This is the third one. And really, it's just if I see the high ticker keep doing this. Literally, right now, after hours, AMC, GME, all of the meme stocks, especially after today, they are getting a lot of hype. There was even a report of a China hedge fund going deep, just going deep heavy on the meme stocks pretty much of China. So we'll see how this plays out. But Airbnb, I'm relating this to that value growth rotation. If this keeps up, I thought it would be good, those plays. Remember, I did 2 of these, same 210 contracts. We got them at like 44 cents. I bought 2 of them, $88, got clapped the day before. Today, they were still kind of clapped. Airbnb was going good, so I was like, all right, maybe these could be good. I bought 2 more for 25 cents, spent another $50. Now we're in at like 120 total. But if things do get crazy and we see some of these tech stocks, I mean, Airbnb, the chart is held up good. Again, you can see it's already back to where it was at the beginning of the year. So some of these companies are still fighting to get to that point, but anything that's kind of leading the way, I think these will be the early winners. And then Tesla even falls into that category. You can see they're right below there, but they're one of the bigger ones that are getting to that point. So keep that in mind. But those are the main plays. As far as everything else, I'm also in these Fords. Remember, we grabbed them the other day at 50, then they kind of went down, and then they popped up here today. They came back to life a little bit. So if Ford and then some of the Tesla EV does good, we'll see. But all of the automakers and then some of the consumer cyclicals, they did actually very good today as part of this bounce. So still holding those, still like those. Again, the Pilgrim's Pride, the Boeing, these are the ones I bought yesterday. I lost 30%, so down like 400 because I went a little bit bigger. So kind of like the Airbnb, I'm going to let it burn one for another day and see the average down. I still like the play completely. If anything, I'm going to either grab these ones or get a little closer to the money, but I do kind of like the price here. So we'll see how it plays out, but I'm waiting there for Boeing and holding that. And then I made a Nike play this morning. I literally got top tick. It was an earnings continuation. It looked cheap. A lot of the premiums were moving. So I was like, all right, give me one of these at 8 cents. So I bought 4 of them. So literally $32. And then literally the next trades after me. All you guys just stole it from me. You got it at the same price. So it didn't really move too much throughout the day. So we'll watch how this one plays out. That one was a dud. And then everything after that, I believe, was taking profits. If you guys remember the EWZs, we've been bringing this one up since Monday. They went up a lot. I was able to sell out in the morning at like 125 or 135. I spent $60 a pop for 2 of them. Got them free. They're into June. So we made that play free. And then the Amazon, this one was a great play. You remember yesterday, we grabbed it at 180. It had the little pop and lock and then came down. This morning, it wasn't doing too hot. And then Amazon started ripping and then it went as high as 420. We bought these for about like $1.80. But then when it was here, instead of selling the play, I thought I'd ghetto spread. I was like, well, if Amazon has another 2% move, these weeklies will be in the money. So I was like, all right, this one could be interesting. So I went with the ghetto spread and I decided to short the 34.90. So if you don't understand the ghetto spread, here's what happened. We bought the 34.70 for $1.80. And when this play was going for $400, instead of selling out and taking the profit, I agreed to sell somebody my right to Amazon at $34.90, $20 higher than I got, but they paid me $320 here at the top to do that deal. So essentially, I got all my money back from the $34.70 plus an additional like $100 of profit, and I still am holding both of these plays. So now by the end of the week, if Amazon goes above $34.70, I'm still able to make money up till $34.90. If it goes above $34.90, I'm capped out. But if Amazon goes crazy, another 2%, 3% tomorrow, we could still make $2,000 on the play. But since we ghetto spreaded it by Friday, if Amazon just stays here, all the options go to zero, we would still walk away with at least a $120 net profit beyond what we paid for the contract. So that is the ghetto spread. That was the only other one that I did today. ConocoPhillips
roll-ups from yesterday, those got clapped. And then the Adobe, I sold out of that one for about 45%, $1.45. We bought it for $1 yesterday, got rid of it pre-earnings, and then they had earnings and then dropped. But coming into TLT and the dollar, I've already explained this. We're not looking at the dollar. This is going to be the main thing here, and this is why I'm saying don't be too quick to judge any moves, and understand at one point, one of these is going to have to give in. So when we haven't been getting escalation, we've been getting volatility. I mean, if you're going to get jumpy on the trade moves, that's why I'm saying just play things small. You get the long term. You won't really feel like you're missing out on too much. But overall, I think the next big move, and if we're really going to have an idea, okay, I feel safe to buy the dip, I feel safe to go short or do whatever it's going to be, I think we're going to get the next tell in the bond. So keep watching this and keep watching how things play out. You're all learning, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you got to rule or be ruled. But the code loves you. I love you. I'm going to see you in the morning. Let's go.